Good afternoon, everybody, and welcome to this afternoon's webinar brought to you by ITRS Group and Refinitiv. So today's webinar is looking at the topic of maintaining operational resilience and, more precisely, what does the future hold for us? So just before we get started, we will have a couple of housekeeping notes. So bear in mind, this is a listen-in only webinar, but you can use your laptop and PC to control voice controls and manage volume. You are quite welcome and encouraged to submit your questions in the questions and answers chat box. We will get to them readily during and after the session. You have a very powerful platform to deal with this session. So use the widgets at the bottom to go through all the features you have. The slide deck and the recording will be circulated to everybody attending at the end of the webinar. So, moving on, let's look at the agenda. So, as ever, we will start off with an introduction to your speakers. We will look at what is operational resilience, what is the impact of operational resilience, and how do you maintain, improve operational resilience, and what does the future hold? So we'll be looking at them through a Q&A session, and then we'll be wrapping up with some closing remarks from both our speakers just at the end of the session. So our speakers, today you have three speakers. So we have Matt Eddy from Refinitiv. He is the Head of Enterprise and Integration Proposition with Refinitiv. We have Guy Warren from the ITRS Group. He is the CEO of that firm. And you have myself. I will be moderating the session. I'm the Director of Market Development for EMEA in Refinitiv, covering a real-time proposition. So let's get to the core of the discussion. Before going into it, let's look at our partnership. So we will be talking with Guy from ITRS Group. And so we have been working together. Refinitiv and ITRS Group have been working together since 2011, so quite a long-term partnership there to develop solutions that ensure the health of critical market data feeds for global financial services. So really the experts in the field, and I guess this is probably the best person to put the very first question to. So Guy, if you're ready to chime in, what is operational resilience? Just in a very quick, hard-hitting question.
Thank you, Doug. I suppose there's two parts to this. First of all, there's the regulation, which is being brought in across the world, starting in the UK. The FCA have already done consultation papers around operational resilience. And then I suppose with a small O and a small r, it's about keeping your enterprise resilient for operational activities through all kinds of disruptions. Clearly, the regulatory one is becoming an important topic at the moment, and the FCA have given guidance as to what they expect regulated firms to be able to do in this space. I've just chosen a Gartner definition here to compare and contrast with the FCA. They're very similar. I think none of them expect perfect resilience. You cannot have all systems running all the time. That just isn't practical. But they do expect you to think about the most likely scenarios that will bring you down and to plan to avoid them. They expect you to have recovery plans, backup plans, etc., to be able to absorb a degree of disruption to what's going on. And particularly when you do have disruption of some sort, that you are good at your communication to the market, the counterparties, to the regulator, if you're affecting the general public, to them, and that you do a deep dive and learning from. They're looking for organizations to get better at running their environments and delivering their services. A lot of it is IT focused, I guess, but actually, as we're seeing from the current pandemic, people are also a key part of keeping your business services running. So making sure you've got everything you need available to keep your business services running. So what is disruption? This is really quite important. Most people think of a failure of a service or an outage as being disruption, and that's true, it is. But they are also saying degraded performance. And if you think particularly about capital markets, we're very dependent on knowing the timeliness of the information and the services. If we're getting delayed market feeds, if we're got slow in our trading in the capital markets, you can lose a lot of money very quickly. So the performance of your services is critically important. And certainly feeding out to the general public, they expect a reasonable service level, and that should be defined. The other thing that the regulator cares about greatly is cybersecurity. That's not something we get too much involved in, but all regulated firms have to have a stance on being secure. And clearly, again, in the current pandemic, we've got a lot more people working from home, therefore a lot more endpoints on our network, and we are seeing, even our firm is seeing a lot more attacks coming in on cybersecurity. So lots of things, can disrupt you. Matt, any thoughts on that?
Yeah, I think, and thanks very much, Guy, for the succinct and in-depth overview of what operational resilience is. I think just touching upon the cybersecurity piece, I think in light of a lot of the work that especially we're doing, and probably yourselves, around sort of cloud adoption, moving to off-premises, cybersecurity really is in the spotlight as well, because we have a lot of third-party agreements, we have a lot of cloud providers, a lot of new captive technologies that companies will be using. From a cybersecurity perspective, all the regulators see those third parties as part of your extended company. So you have to apply the same diligence you would to your third parties as you would to your own. So we've seen a real big step up, especially in the cloud, around their cybersecurity practices, their education to their own customers, etc., just to make sure that that is covered off. Because if they don't get that, they're failing penetration tests, MDoS attacks, etc., then that really can undermine confidence. I think just touching upon sort of the foundations of operational resilience as well, just from my perspective, it reminds me a little bit of how MiFID I and then particularly MiFID II came into existence. Repeated failures, undermining the confidence and the stability of the financial services. And so a lot more diligence was put in from all of the regulators, in this case, the FCA, the PRA, and the Bank of England, sort of joining forces to say, we need to make sure that we have that stability and that confidence and that consumer protection. And a lot of that reminds me really around MiFID. The other reason it kind of reminds me about how MiFID sort of pervaded all of our world was because, again, a European Union mandate, but with the age of equivalence and with international companies with UK footprints, where the FCA leads, a lot of others follow. So I'm expecting this to be kind of a ripple effect across the industry as well.
In fact, I think it already has. The Basel Banking Accord have picked it up, and off the back of that, they have a committee on operational resilience. Every regulator that I know of is also now bringing operational resilience in through, the MSA, MAS in Singapore, and the Fed in the US. So I think it has already gone global, although they're lagging behind where the UK is.
Are they using similar terminology around levels of harm, etc.?
Yes, the Basel Banking Committee have a committee set up, and the FCA are feeding in their feedback from their consultation papers as to what is practicable, what should be expected, and the regime, I think, is going to, as it often is going to be at least mimicked and copied as it goes around the world. We're seeing that, interestingly, in the UK, they're making individuals liable for operational resilience, not corporations. So if someone is named as a regulated person, they personally are liable. And just when you've got the FC10As who have control over client monies and the authority they need to have in a corporation, the same will be true for operational resilience. If you are carrying that title, it's you personally and your family that's liable, not your corporation you work for.
Yeah, I think that's an important point. So I think it's FCA 24. So
yeah, SMF 24. Yeah.
But depending on each organisation, I guess that role is going to fall to different individuals. But yeah, if there's legal and reputational damage associated with it, that does certainly become a lot more skin in the game, I guess, for companies.
Yeah.
Is that something that you think COVID and the recent outbreak has accelerated, or was that the path it was going down anyway, the idea of personal liability?
When it first came in, they had the senior management function, SMF. They call it the SMF 24. They insist that the group COO at first is named as the SMF 24. You're allowed 2 other people, so up to 3 people, because very often the CISO is a separate role, the security side. and they allow one other person to carry that title inside the organization. It cannot be pushed down the organization. It must be at the C-suite level. And there's a personal liability, and you sign a lengthy contract with the regulator if you take that title on. That means you will have to have a lot of authority to get things done, and that's deliberately why they've gone. It's not a fine to the firm. It's a penalty to the individual if they feel they're not executing it properly. SMF24, I've been a CF10A for client funds, and it's a very serious responsibility. You don't take it on lightly, and you have to have the authority to do your job.
Maybe just responding to Doug's point there around whether it's, the pandemic has fast-tracked this. I think, is it the other way around, though, with the consultation period being pushed out from April now to October?
Correct. They were saying they were hoping to have it in regulation at the back end of 19, and then it got pushed into early 20, and then they said they have to look after the pandemic first, and now Brexit is obviously going to tie them up because they have to get regulation in place for post-Brexit. So they're saying it's probably the back end of this year or early next year now before it'll actually come as a hard regulation. But they're saying they're not expecting member firms to see that as a let-off, that they have to start behaving as if they're regulated now. And in fact, they have said that they're doing some investigations into outages and breaches that they feel would fall under this regulation when it comes in. How draconian they are with their actions is yet to be seen, but they have multiple investigations running under operational resilience, even though it's only a consultation paper.
And so even if by end of 2021 they're expecting a greater compliance, that by the time budget cycle kicks in, any massive changes to infrastructure, operations, processes, etc., that's going to take up 2021 if that is the mandate.
Yep.
Good times ahead.
yeah. Important. I think there was a lot of noise in the retail world around outages from high street banks, mobile banking, online banking. We commissioned a little survey, and I think we found it was almost one a day was being reported to the regulator as a notifiable outage, and they just felt that was too high. And we also had an outage on the Visa clearing, and 90% of debit cards are Visa cleared. And that meant, debit cards were out for a day, and that got the Treasury Select Committee all wired up, and they called the FCA in and said, "When's this regulation coming in? Is it going to bite? Are we going to have less outages?" The general public are relying on online services, and MiFID does bring that to the fore. We can't have organisations not able to deliver those services, so that's why it all got ramped up in 2019.
Interesting. Thank you, Guy. Thank you, Matt. And I think that brings us nicely into, I think, a poll question that is really relevant now, which is, what is the impact of COVID-19 in your organization, which is really relevant. So, let's just put this out to the audience and see what they have to say. So, you should have on your screen, everybody listening, you should have a series of radio buttons that you can click on. So, what was the impact of COVID-19 to your daily operations? Was it establishing remote access to critical systems and tooling, having confidence that your systems would manage the sudden dramatic spikes in volatility, reacting to business demands to take advantage of new market opportunities, or all of the above? So establishing remote access to critical systems, having confidence in your systems that you could manage spikes, or reacting to business demands to take advantage of new market opportunities. And it could well be all of the above. So just take a few seconds to put in your input there. We can move along and see what the results are. So let's wrap it up and just move on. You should be able to submit. So as we move on to the results, interesting, some, all of the above seems to come out with, close to half of the people responding. What does that say to you, Guy, Matt? What do you think about that? People are generally confident that their systems would work, but, they're clearly looking at opportunities that have come out of operational resilience as well. Anything stand out there for you?
Yeah, probably the percentage you had to do with everything. That's higher than I was expecting. Undoubtedly, everyone had to look after remote access because that was forced on us. Most people know that they've got sufficient headroom, but we saw volatility numbers of 5x, 6, 7, 8x. We're watching the VIX indexes. We saw certain asset classes were massively volatile. If you remember sterling, as we gave the announcements, dropped from 125 to 115 to the dollar. That's a lot of trading of currency to move it that far. And in fact, all asset classes were traded massively. Market opportunities, well, any trading, the algo engines will kick in when there's large market movements, but so will the traders. You get a chance to make money on ups or downs in the market, and taking positions. You have to decide who's going to have bad share prices, good share prices. You're going to have to work out what fixed income's going to do. So undoubtedly, it created a lot of market opportunity, and therefore probably a lot of trades at a time when your staff were trying to work out if they had access to every single box that they thought they did when they're working from home, which is not their normal modus operandi. So yeah, I can see it's interesting.
And Matt, anything to say to that?
Yeah, I think, as Guy mentioned, all the necessary work that had to go in to work into a virtual operating environment and invoking disaster recovery and BCP drills, etc., that probably weren't expected to be at that scale. But equally so, we saw a lot of new opportunities our customers were exploring, demanding extra capacity on their existing feeds at short notice. Even in a downward market, there's still people making money. And so there's still a lot of opportunity out there that customers were picking up. So I think balancing the volatility, as Guy mentioned, the sort of 5, 6, 7x market moves. We also saw, I think our record on the Electron Core network previously was 80 billion, kind of around Brexit time. I think that spiked up to 176 billion messages, just so, double what we're normally seeing at our network. And, that kind of spike was just endemic across the entire industry. So a lot of customers were struggling. And I think we'll probably talk about a little bit more of that on the next slide around impact as well.
Yeah, I mean, and, this goes right into what you're talking about. I mean, what is the real impact of operational resilience? So while you have the mic, I mean, do you want to chime in there?
Yeah, in terms of impact, and maybe just carrying on that thread around sort of the volumes. I just got a report, and actually just this morning, from our Oak Brook Development Centre saying this quarter had been their busiest quarter since they'd started recording results sort of 10 plus years ago. And a lot of the reasons for that were because of volume-related and capacity-related issues. Just traditionally looking after their TREP software customers, all of a sudden had to tune, or were dealing with network saturation where they previously hadn't. Lots of issues on production network were impacting them. And then, tuning, improving capabilities to be able to soak up those, because, as Guy mentioned earlier, even if you've been able to ride out one wave, there's another new wave that's going to be potentially hit, and you need to be prepared for that. So I think that's the real impact, is understanding that, the dramatic events that have happened in the first half of this year, and that they could happen again, something different, something much more major could happen. I think COVID has fast-tracked a lot of BCP plans. I think, the difference between BCP and DR, BCP being a lot more proactive around how you plan out how you'll continue with business in unforeseen events. Disaster recovery, reacting to those events. Both of those really have been fast-tracked because, and from my perspective as a rather than on the vendor side, but as an ex-customer, if you will, I never foresaw there would be a global lockout of all of our buildings, and I don't think a lot of our other customers did. Well, there was always that kind of follow the sun mentality. Someone else in another region could pick it up. I think that's reset a lot of business continuity plans. I think from our perspective, we saw a lot of buy side reacting probably better than the sell side. Buy side seemed to have a little bit more agility, a bit leaner to operate, so they transitioned to that kind of new world order a little bit. Sell side, I think, a lot more institutionalized desks, etc., a lot more face-to-face processes. So that's really kind of struggled. But yeah, I think in terms of what the impact is, it's going to be a lot more granular reporting, a lot more granular collection of data. That's going to lead to bigger impact potentially on the servers. So guys would be happy to talk about zero footprint or low footprint sort of monitoring. But then what about data lakes? How are you going to collect all of this data? How are you going to store it for the time that you need to be able to go back and interrogate it? So it's kind of a step increase in the rigor that a lot of these companies will be looking to implement. Guy?
Yeah, I think operational resilience was also, if you're bringing any service to market, or if you're modifying a service, you've got to think about how you're going to provide business continuity, how you're going to deliver the service, how you're going to measure it. What the regulation does on top is it makes it a lot more formal. So, you know, you need to set SLAs for a service. There's an example on the screen there. Suppose you've got a retail banking portal. You have to say Logon shouldn't take more than 5 seconds. So when it's taking 10, you've got a reportable event. A balance inquiry shouldn't take more than 8 seconds. So when it's taking 25, you've got a reportable event. It does make you become a lot more formal and careful about delivery of a service and launching a service. Financial institutions are trying to be agile. They're trying to bring through new ideas very quickly. Now they're saying, don't bring them through so quickly that they become fragile and that they break too often. That's not acceptable. Take your time, write it down, get your plans in place, model a few scenarios, make sure you've got enough metrics coming back that you can see what's going on, and when you've got performance issues or availability issues, that you're on top of them. Don't put those in after the first or second or third failure. There's a bunch of things affect operational resilience. You know, you've got your architecture needs to be resilient and tolerate failures. You need good change control. You need thorough testing. You need good visibility and monitoring, which is an area we're involved in. But without the other three, you're going nowhere. So there's a whole bunch of disciplines that you just have to think about a lot more carefully. And whoever's carrying that SMF 24, whoever's responsible for operational resilience for your organization, they need to have oversight that it's being thought about and managed properly and delivered in a careful and deliberate fashion.
Thank you, Guy.
I think just touching upon briefly the loss of performance there as well, that's probably the harder thing for a lot of our customers to understand, right?
Very much so.
A binary failure is somewhat easier because that's easier to troubleshoot. The degradation of performance, that can manifest itself over time across multiple components, and that really is the challenge, and being able to understand where those failures are at.
Yeah, you know, we work closely with Refinitiv. We've had a capability for a number of years, which lets us see if you're getting a slow feed. If you've got multiple feeds coming in, some consolidated, some direct, whatever, if one of them is being delayed for some reason, we have software which can pick that up. You need to know if you've got performance, and that's like outbound as well. So if your trading engines are having issues and you're seeing changes in latency, we can pick that up and flag it. It's the most insidious, I agree. Slow is far worse than out. Out is relatively easy to spot. Slow is very hard to spot. But it's critically important that you have that visibility on what's going on inside your estate and out to the internet. Both, you know, it has to go all the way through to your customers.
Yeah.
And, you know, while we're talking about performance, I think the next question here is quite relevant. So, I mean, how do you maintain and improve operational resilience? I mean, I mean, while we're on this thread, I think maybe, Matt, do you want to pick that one up? Guy?
Yeah, absolutely. I think this probably touched upon a few of these points. Yeah, sorry. I thought you said Matt, was it?
Yeah.
So in terms of some of the improvements we're looking at, I mean, you've got to identify, and this one's the critical one, it's key client services. Traditionally, a lot of companies will look at their own disaster recovery or BCP plans application by application. I think what the regulations are now saying is that you really want to start looking at these as the key client services. That is a potential end-to-end workflow. So where we talked around degradation of a particular service, if one application fixes their particular hotspot or capacity concern, improves performance, that has a real good chance of rippling down onto the next application and just inflicting more damage down the pipe. So understanding end-to-end workflows, I think that's going to be one of the big asks from a lot of these regulations. I think we've got the other issue around, as mentioned earlier, cloud. So you've got internal and external SLAs that you'll also need to either create or adopt. That's with your third party, but it's also going to be with your back-to-back between your applications, between infrastructure owners, between data center providers, etc. So I think all of that, coupled with the current climate, which is all about cost save and finding efficiencies, a lot of what we're talking about is investing time, effort, resources, and infrastructure to deliver that. So how can you be clever with your DR plans? How can you reuse what you've got? Do you need a cold DR facility anymore? Can you use a backup production or an out-of-region production site to be your DR facility, for example? So how can you have intra and inter-region failover? I think having the capabilities to route that, I think that's what, again, a lot of our clients are trying to look at our enterprise platform to be able to move data around and be able to move workloads and capacity around as they need, rather than trying to bring new pipes in or spin up new data centers or cloud capabilities. It's easier to try to work with what you've got. So Guy, I didn't mean to jump over there. Sorry.
No, that's good. I agree with all that. You know, there's many aspects affect operational resilience. I've already sort of mentioned, I'd call out things like having a resilient architecture, and that includes failover, as Matt was talking about. It also includes your change control. So we used to have relatively formal, rigid, you know, carefully thought through with rollback plans. You know, change control boards were a right pain on a Friday trying to get them all approved for the weekend. And that was good discipline. Now we're switching more to DevOps, and we're even talking about, you know, CI/CD, fast change, fast fail. The regulator doesn't really want fast fail. He wants low fail or no fail. So, you know, change control needs to be thought through. Your testing strategies, both performance testing and functional testing, and even disaster scenario testing, that needs to be thorough and well thought through before you release it. And then you do need the visibility. And you know, there's some words on the slide here around. Can you monitor your SLAs? Is your performance degrading? Do you understand your capacity? Have you tested your capacity? And can you see from your production estate what capacity headroom you've got left in your estate for different types of trades? And do you understand your architecture and all your failure scenarios? But it's a multidisciplinary thing. It's people, process, and technology, and you need all of those without a doubt.
Thank you, Guy. Thank you, Matt. Moves us nicely into the next poll question for our audience. So you should see it appearing on your screens in the next few seconds. So like before, nice question here to just feel the waters. What challenges do you foresee for the future? So submit your answers. Operational challenges in the event of continued market disruptions, managing stakeholder expectations on capacity and stability, being given the time and budget to adapt and integrate revised contingency plans. So again, what do you see as challenges for the future? Operational challenges, managing expectations on capacity, or being given the right time and the budget to adapt and integrate and revise contingency plans. So just drop your answers in there. We should have enough questions, so I'll just go straight forward into that. Let's have a look at what's after coming up. So pretty even. If we had all of the above, I think it would have been split down the middle. We'd been okay there. So anything standing out there for you, Guy or Matt? Pretty even around each of the views of the future. Anything stand out there, especially around the
I think the last one's going to be. I think the last one's going to become important. If people are carrying that SMF24 title, and they're already appointed, by the way, they will not want to hear there's no budget, and neither will the regulator. That's one of the things that they say is you don't have a banking license, you don't have a right to trade in a market if you're not prepared to make the right investments. So do not tell me you can't afford this. Okay. So that will put a lot of pressure that people are given the space and the time and the money to buy the tooling and whatever they need for a reasonable level. They're not talking ridiculous. They're saying sensible, but don't go pleading budget. That won't go down well with the regulator, I can tell you now. And that should therefore get a bit easier to get that kind of stuff approved. The SMF24 should kick in and say, let them have an extra weekend to test it, or let them have that tool that gives them a bit more visibility or whatever it is. The other two, I can see expectations are never met, and there will be more disruptions. You're not going to get away from those two.
That's right. You've lived it. Okay. Okay.
I think it would have been interesting to see what the job titles were that associated with those votes as well. So certainly the business aspect, the operational, and then sort of the implementation. So certainly a lot of different angles to come.
There are. They're insisting that the group COO carries that title by default, and deliberately the OO, so that the operational aspects are covered of people and everything else. Because it's often IT related, they let you bring one extra person in. That might be your head of IT production or your CIO for development and production. And because the security is also in there, they let you bring in a third person, which may be your head of security or CISO. But they're not allowing the group COO to push it down the organization. They say it will never get airtime, it'll never get budget. Unfortunately, the guy who really, really controls what you spend your money on has to carry that liability. They've already put that down in the consultation papers.
Yeah.
And rightly so. If that's where it needs to sit, if you're going to be doing it seriously.
So, you know, this is, I think, the toughest question we have on the screen. So, you know,
if I could answer this one, I wouldn't
talk about liability.
I
I mean, who wants to take on this question? Guy, Matt, what does the future hold in relation to operational resilience? Nothing else. So, who wants to take this on?
Go, Matt.
Okay. So I think what does the future hold, like as Guy just mentioned, if we knew this, then we probably wouldn't be sat on this webinar. Yeah, sitting on an island somewhere. I think we've probably already touched upon some of the points already, though, around what is going to change. And I think there's a few. It's going to be organisational to accommodate some of those changes that we need to see. Whereas it's not application, but it's going to be the entire life cycle of a workflow. Processes have got to be a lot more robust, as we've talked about, the change management, incident management, problem management. They've been maturing at a lot of organizations in the financial services industry anyway. I think it just needs to be another step up in terms of robustness and maturity around those as well. It's still probably a truism, and I think we probably should have put a question in there whether most of our customers believe they've got a robust DR plan or not. I think that's still sometimes the first thing that gets cut from budget. So how are you going to change the infrastructure to accommodate for that? Are you going to look for that investment, especially, you know, during these sort of leaner times? And then from the sort of the operating environment and BCP logistics, the HR aspect about, you know, where do we put people, what access to systems do they have? There's a lot of change when there's a time when we're all really trying to simplify and cost save. So use what you've got efficiently would probably be my guide there. I think the other big aspect around what the future's holding is the change in DevOps and cloud that's coming on board. A lot of those are sort of initiatives all speak to agility, and agility is probably the antithesis of what a lot of financial services like, which is stability. So you can do both, but it is definitely one of those aspects where greater agility, you need to catch up and make sure that your capabilities, your capacity, your plans are in place to accommodate that. So I think there's a lot of change coming. I think, as also Guy mentioned earlier, with Brexit coming up for the UK, how does that fall into this? How do customers then look at possibly balancing between what they need to do from an operational resilience mandate versus what they might want to be doing from Brexit contingency planning? You know, are you going to build out new data centers in the EU? Are you going to move to a more cloud-based approach, which gives you some of that flexibility? And then how are you going to build in all of the resilience factors that we've just been talking about? So that's kind of my view on it. I think, you know, it's kind of a woolly answer, but I think that is the nature of the question, I guess. Guy?
Yeah, I always like saying that, you know, that the past is not a good guide to the future. I think it's one of the things that an investor has to tell you when they're showing the historic performance of their funds. And the same is true in operational resilience and incident management. Is you plan for one scenario, a data center going down, and you get a completely different one, which is no one can go to the office anymore. Or it's a terrorist attack, or it's weather, or it's well, there's an interesting one actually went through last year. A lot of people are moving to you know, to Azure and to Office 365, and if you're using an Active Directory service and you have cloud only, they had an outage for about 6 or 8 hours in Europe for, you know, on their platform. So Matt made the point earlier on, increasingly your production data center is based on the services being delivered into it, and if the services being delivered into it are being disrupted, then so is your business service. So, you know, you've got single sign-on locked onto Active Directory and Active Directory is down, you're locked out of your apps. So this understanding of the codependence and the things that can take you down is getting harder and harder as everyone goes to SaaS or everyone wants subscription services and you're dependent on those services being available. So whatever scenarios you've thought of, they're not going to be the ones you have to deal with. That's my guidance. Therefore, you know, how do you deal with this disruption? How do you set up your command and control? How do you get your sources of information about what's going on? Because it'll probably be muddy. How do you communicate back out? I remember running an incident room when 7/7 happened in London, and we were going to use the mobile phones to call all our staff and see if they were okay. they took down the cell masts and we couldn't call anyone. So that plan just was completely waste of time. So you have to have massive flexibility. You need to be able to adapt to the scenario you're dealing with, but without losing control of it and showing that you're on top of it and you can do the best you can with the information you've got and the resources you've got, marshalling it in an efficient fashion, being clear who's got control of what the organization is doing as it responds to an instance in the first few hours. And then obviously over the longer period of time, it gets a bit easier to sort out how you govern it.
The plans of mice and men, I think, is the old adage here. Interesting. Matt, sorry, you came in there, sorry.
So I was going to say, and what about sort of the regular cycle of testing and performance? What's your views on that, Guy? Is that life cycle or that cycle going to shorten?
Yeah, performance is an interesting one. The regulator in the original consultation paper talked about you need to understand the performance of your production estate in business transaction terms. So don't tell me your average CPU was 38%. That means absolutely nothing to me. How many trades can you do at peak? How many quotes can you do at peak? How many recipients, counterparties can you have connected? Whatever the business metric is, talk to me in that number. And tell me what you see in a normal day and when would you max out? Do you know that for your production estate? A lot of people who you would have, their infrastructure teams generating the report saying my headroom is, and then it's in some CPU memory averaged over, across 10. And the regulator said, not good enough. You might be happy with that. I can't say that you've got headroom. So that's been a real problem for people, is getting a business view on their capacity and their capacity reporting. And actually doing the work to find out what the headroom is, other than in a lab, in your production center. It's doable. You can collect the data and analyze it. It can be done, but it's not regularly being done. Disaster recovery, I think most people do practice that. I know, most regulated organizations I've worked with or at, they have the 6-week failover scenarios and they change the scenario each time and, see what happens on failover and fail back. Very few people do scale at failover, so they fail to the DR center and then they don't know what the scalability is. And to Matt's point, you almost certainly don't have the same capacity in your DR site as you had in your prod site, but you don't know how bad it is. You don't know how low you are when you're in DR. It's it's a never-ending game. You could spend millions and hundreds of man-hours trying to make this perfect. It's about being thoughtful, being allowed to spend the time and money to do it. I do agree we're all under cost pressures. But the regulators said, don't come to me saying you couldn't afford it, because that says you can't afford your banking license.
Yeah, learn from mistakes as well.
Yeah, learning. That was a key word on the FSA. You're quite right. The FCA's mandate. Show me that you have institutional learning, that you own up to problems and dish them up and go and sort them.
Thank you, Guy. Thank you, Matt. Brings us on to the final stretch of this webinar, which is usually the most interesting and the most revealing in a lot of cases. So we've had a lot of questions coming in. So I think let's just get straight into it from our audience. So question one, this probably goes to you, Guy, judging by when it came in. So the Logon and balance inquiry SLAs, how many institutions actually know about this? And what is the rate of reporting? So what can you add to that?
They have to report when they've not met their own service levels. That's a requirement already. And that's where we picked the data up to do the analysis we did in 2019. So I don't know how pervasive it is and how granular the actual reports get, but I know that they are now expected to report against their own SLAs for their major business services. So yeah, it's up and running is the answer. And the granularity, to an extent, the regulator never tells you the answer. They say, tell me what you're doing, and I'll tell you whether it's sufficient. But norms generally does settle out. People work out what, when you're told to improve it and when you're told it's enough. So I would just make sure that you are reporting it and that you're off and running with the definition of SLAs. Okay.
Another question, do you think, I guess this is open to everybody, yourself and Matt, do you think that the BOE FCA requirements for checks on third-party providers, critical or otherwise, can be very onerous? And how easy will it be to comply? It's kind of an open question there as well.
They are onerous, and as Matt said, the ECB, the Central Bank of Europe, are saying, it's completely your responsibility if you decide to outsource your data center or have a service delivered to you. It's your service. You own it for lock, stock, and barrel as far as us as a regulator are concerned. And that sent another shockwave around all vendors. We probably have 40 questionnaires or investigations done, and we're a software house delivering software products to regulated companies, and they expect us to be following, ISO 27001 data security roles. We've got GDPR constraints, et cetera, et cetera. So now I can feel that they push back onto any supplier, whether you're a download software or a business service provider. They know that the regulator holds them accountable, and they have teams already, reaching back into organizations like us to make sure we're meeting the standards necessary.
Yeah, I think just add on to that briefly as well. So some of the third parties are trying to differentiate themselves by showing a compliance to these kinds of regulations as well. Because if they can put the paperwork up front and say, we're already signed off or we're compliant, and here's some customer testimonials, here's some regulators' responses, that just removes that pain, right? The ambiguity. You just don't know whether these guys who you're relying on for critical services could be or might not be running a compliant infrastructure for you.
Thank you, Matt. Question 3. Do you differentiate the depth and how deep can the initial shock be before reaching the point of non-resilience and the speed of resilience? So I guess this is about, how, so let's just say, differentiate the initial, so how do you differentiate the initial shock before you reach, I guess, a plateau of non-resilience? So how do you know where you are, I guess, is that question.
Yeah, I would always say start from the customer's point of view. In the retail world, there's a technique called synthetic monitoring, which is basically browsers, computers sitting in the internet in data centers all around the world, testing your service to see if it's working, to see how fast it is, and reporting back to you that your service is being delivered to the internet, and tells you, how long Logon takes, how long, whatever. So I think the regulator's saying you need to know what it feels like to be your own customer. Now, if it's a B2B type service, so the open banking APIs, for instance, consume your own APIs and make sure that they are fast enough. So I think that's the first test. So if something is, you've lost a node out of a cluster, to your point, you've had disruption, but it hasn't stopped the service, but it may have slowed it down, you should know how fast it's now running for people who are consuming that service. That's the difference really between an incident and a problem. You can have an incident, you lose a node in a cluster, but it's not a problem until it's actually brought the service below an SLA or taken it out completely. So yeah, absolutely, you have to know it. And I would recommend working from the outside in. Monitoring inside the firewall is necessary, but it's not sufficient.
Thank you, Guy. Leads us on to another question. How do you combine resistance and resilience? Who wants to take that?
Resistance to change. I guess we're talking about resistance to failure. So how robust can you make your systems, if that's the point of the question? Well, you obviously look for a industry leading, mature set of software and infrastructure and capabilities that have got decades of experience built in. So, we obviously offer all those, so that's great. But certainly combining resistance and resilience is obviously building out the ability to have intra and inter-region failovers, to be able to have schedule capacity on demand would be a great way. How you build resistance into that, robust software practices, best practices around DevOps. There's a lot of third-party kind of capability scans. So as we talked about cybersecurity earlier, penetration tests, Black Duck Hub, these types of activities where you can just run against open source software or against malicious code that you might have inherited. There's a lot of basics that you can do like that just to get that checkbox, that assuredness that you are resistant to failure. If you are having failures, you've got to expect failures. There's always going to be single points of failures or weaknesses in your system. That's how you should be planning out resilience. And that's how you should be then mapping your DR events. DR is not always about major disasters. It can be about small, isolated, mini disasters in your environment, and how you can ride those out, how you can fail over to other systems, how you've only got monitoring tools. So ITRS is another example. It can monitor, but it can also invoke actions as well. So if a threshold's reached, don't wait for someone to press a button, automate those scripts, that kind of activity. I think that's really, these are just best practices most of us should already be hopefully adopting.
Okay. A nice question coming up here, and this maybe is a little bit outside of the financial services, but it's interesting as well. When do you expect firms working outside of financial services to begin focusing on operational resilience, and which sectors will be first? Energy providers, transport and infrastructure providers, etc. Nice kind of theoretical question there as well. Outside financials.
Yeah, we sell software outside of financial services. I mean, if you're a regulated industry, telecoms are, for instance, then the regulator will care greatly if your broadband keeps going down, if your telephone lines don't work, and they pride themselves on, dial tone levels of availability and performance. So there are industries that are regulated that aren't financial services. Healthcare is another one. I think, luckily, customer demand, customer expectation, we've switched to doing everything online. We've switched to expecting everything to be there all the time. Our tolerance for poor performance and loss of service is very low. And now with social media, we can complain even faster than the monitoring tools. If you had an outage on any major business service, Facebook or Twitter or whatever, you will find it lights up on social media even before the monitoring tools have lit up. And your share price was being dumped, and. So I think it is going to be expected that if you deliver a service to the general public or to business partners who have needs of high availability, you will have to get good at operational resilience. Financial institutions have to, because they're managing money and other people's money, and therefore it's right that they are controlled and regulated. But it is becoming the norm across almost every industry that we deal with now.
Okay. Back to banks and finance. Banks have a number of documents like business continuity plans, crisis management plans, etc. Are banks now working in order to put all these documents under one document, i.e. operational resilience planning?
Yes, there were already requirements around control and audit of your production estate. That was existing operational requirements for stability. Not surprisingly, the operational resilience paper that's coming through with the FCA that will go global does ramp it up and does incorporate them. So everything that you've done is already useful and will already form part of it. I think going to an SMF24, going to a liable individual responsible individual is showing the seriousness that the regulator is now taking, and they will have to leverage everything around how do you set up an incident room, how do you have business continuity. I think security worries them too. So the CISO, who might have been a bit left field, that's now under his remit as well. So there is nothing that you are not liable and responsible for that relates to delivering a reliable business service, and everything that's gone before hopefully will be a leg up on that journey and not starting from scratch.
Okay. Do you see the development of impact tolerance in firms, and if the impact tolerance concept was utilized during COVID?
I suppose it's the opposite way around of operational resilience. An impact of whatever type is going to happen. It could be a failure of a piece of software. It could be a pandemic, and your tolerance is your ability to tolerate and cope with it and not fail. So I don't see it as a massively different thing from operational resilience. Just describing it another way around, really.
Yeah.
And
okay.
yes, it needs to continue to improve. There are still too many outages, so that needs to continue to improve, which OR will bring.
Okay, and the final one. This is nice. This is you like this one. So, to what extent do the panelists believe that firms and FMIs are aware of each other's recovery time objectives and strategic intent in stressed environments? So, I guess keeping up with the Joneses.
I'll get my views on that, and I'll be interested to hear, guys. I think that a lot of that is absolutely independent from each other's organisations. I wouldn't imagine a lot of that is being shared between firms. What possibly could be happening, though, is passing that back into the FCA in terms of best practices and almost kind of adopting or iterating through that to come up with standards. And then, as Guy mentioned earlier, the FCA hearing your results and saying that's not good enough, I think they're also probably learning on the job as well what is feasible. But I don't think there's a lot of sharing between them unless you've got your incident managers or your COOs or whatever moving between companies and then take intel from door to door and being able to reuse that elsewhere. I don't know, Guy, what's your
yeah, no,
on
I don't think they do, not at any detailed level. One of the earlier questions was, is there a minimum requirement from the regulator? No, it's the other way around. If you say your service is, let's be silly, 30 seconds to log on and 3 minutes for a balance inquiry, they're going to say that's a really crappy service. Good luck selling that to anyone. So you can define a service and its resilience or lack of resilience as you wish. You could say that this is a 99.0 availability. That's 1% of downtime. That's 3 days a year it's going to be down. Not many people are going to sign up to a service that's going to be down for 3 days a year. So it's going to be more than 99% available. It's how much more than 99% available you're shooting for. And there's 3 nines, 4 nines, 5 nines, and higher if you need to. So no, I don't think they do know each other's. High-level individuals move between the banks. So if you've come from an organisation that ran its IT well and join one that's weaker, you're probably going to have a fresh pair of eyes on it and say, do we really tolerate that? Where I've just come from, we wouldn't have tolerated that. If I'm the SMF24, I'm going to feel uncomfortable representing that level of availability to the regulator. So but it isn't published. It's not shared. It's not mandated from the regulator. It's the other way around. You have to declare your service levels and then show that you're trying to achieve them.
Okay, thank you, Guy. Thank you, Matt. Coming up to the end of the session, what would you like to leave us with? What comments to wrap up? I mean, from operational resilience and so forth. How would you like to leave it? If you had one message to the audience, what would it be? I'll go for you first, Guy.
Yeah, I think we've got a challenging year ahead of us. The regulation will come in, and start to have teeth. We've got a plan for Brexit and probably make some changes for Brexit, not massive, but I think there are changes for many firms. And we've got to work out, is this the only pandemic or are there going to be other pandemics called in the future? And if so, will we have the same lockdown? So a challenging time ahead to meet, the various business pressures we're under.
And Matt, what would you like to leave us with?
I think as we've explored over the past sort of 50 or so minutes, there's still a lot of unknowns. I think the good thing is we're still in the consultancy phase. So the consultancy that I mentioned earlier that was going to wrap up in April has been extended to October. There was 95 respondents to that consultation from the FCA. So if you do have questions, that will be the place to go and really make sure that your voice is heard, because there's a lot of clarifications. That document or that paper is going to iterate through and get a lot more granular as more feedback's given. So I think that will be a good place to start. I think the other aspect is as well that looking online, the big 4 advisory companies are offering lots of operational resiliency packages and advice. They don't go and do stuff if they don't think there's money to be made. So I think what we are talking about here is a real challenge and a real threat to some companies if they don't take it seriously. So I think that alone should put this as a priority to start looking into and at least explore where your weak points are. I think a lot of people have probably got some good DR and BCP feedback over the past 6 months that they can start to put into practice now and at least have a foundation for how they can build on that to start addressing it. So I think that's another key one. And I guess my last message really is as a thank you to you, Doug, for facilitating, and over to Guy as well. Thank you very much for taking part and sharing.
Thank you for the opportunity.
Okay. Thank you, Matt. Thank you, Guy. Just call out to our audience. So if you want to keep up with this topic, I would encourage you to either get in touch with your Refinitiv account manager, follow us on our Refinitiv site. You can follow us on LinkedIn and Twitter and so forth, and just keep subscribed to our blogs and so forth. We will be publishing an operational resilience report in July, so keep an eye out for that if you want to keep up with this topic. Thank you to everybody attending and dedicating an hour of your time to this topic. I think it's something to keep an eye out for the future. Thank you, Matt. Thank you, Guy, as well, and everybody from ITRS group. The session will be recorded, and there will be follow-up with slides and so forth as we close down. So wishing you all a pleasant afternoon, and thank you for the session, and thank you for your time.